today. Can only go till 5. I have a chiropractor appointment. So we're going to get going here right now. Again, if you have questions, you can pop into the room. For those of you that don't know what I do, I'm mostly short. So I had this lecture scheduled for today, not knowing, of course, when I decided to do the lecture today, where exactly the market would go. So this is a very good day to discuss this because, again, the market fell today. A lot of stocks fell today with it. We made money shorting. If you did not short today, you lost money. I'm not sure if anything actually rallied today in the market. But I tend to go to the short side and have made a living out of doing nothing but shorting. I do puts, which are options, which is a short, and I day trade too. Okay, so we did a day trade in Tesla today, which was the day trade in the room, and then we did a ton of other options, and we came into today through the weekend into puts that we were already in, and the market was down this morning when I woke up, so that was a nice surprise for a Monday morning and a great way to start the week. So if you're here today, you might want to find out any more information, if you want to learn my method, if you want to trade with me. Again, if you're here, it's to find out a little bit about what I do. Ask me questions or here with me live. You can ask me questions. Some of you are recognized, have been following me for a while. Some of you are new to what I do. But again, for those of you that don't know, I only do gaps, okay? I'm looking for gaps in the side of institutional money, which I will talk about today. And again, I mainly focus on shorting. I also appear on TV. I'm actually on Charles Schwab on Friday. That'll be an interesting discussion with the market. And Friday is the deadline for the government shutdown, which is part of the reason we sold off today too. If you have questions, you can email me at melissa@stockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, which is now X, Facebook, YouTube, or Skype. There was a major outage today on X. In fact, I don't know. It was a cyber attack. I don't know if actually it's back up or not. It's funny, I saw it actually trying to get online before I actually saw the news. And that also accounted for Tesla falling today as well, even though Tesla has nothing to do with X, but it's owned by Musk. Anyways, here we are. 2025 is here. Again, are you off to a good start? It's hard to believe it is already March, but let me tell you, time just goes so fast anymore. It's really shocking to me, actually, that we just changed the clocks. Again, it's going to be light out later now. Unfortunately, it gets light out later in the morning, too, and I like to walk in Central Park. The sun doesn't rise now till later in the morning as far as with the time. But it's time to get going. You know, if you're somebody that likes to set goals and you like to get organized and you like to get focused, don't wait until June, July. You know, don't wait until you're like, oh, I'll do it, you know, over Memorial Day weekend or something. Today was a very advantageous day to trade. Why? We had a lot of volatility, huge moves in stocks in the overall market, power trending market to the downside, which is rare. It's rare the market power trends. Not rare it falls, but it's rare that it power trends, okay? And when you have something like a power trend, you can literally enter a stock in the market and hold it basically almost into the close, okay? And again, you don't want to be stopped on this time trading because now's when you can make money, okay? And there are different periods, different times of the year where, yeah, the volatility is higher than the others, or there's more opportunity to trade than the others, or stocks are having bigger moves than the others. And, you know, everyone wants to make money when they're trading, but a lot of people decide they want to do this and they really have to try to find a way to make the time in between what they're doing. Right now, if you're working full-time or if you have family or whatever you have going on in your life, you have to find a way to set aside time to do this. I only trade in the morning and day trade in the morning, in and out quick. And it's kind of funny looking back at the day trade I did today in Tesla where I get out of it and where the stock ended up going today. So Tesla went to what I thought was a dream target today, which was 225. And it's kind of funny because I had a great trade today. I had a fabulous day trade. When I have time later, I'll get the room video up on YouTube. But it went way past that, okay? You have to figure it out for yourself. Everybody has a different schedule. Everybody has a different life. Everybody lives in a different time zone. Figure it out. You're never going to have all the time and all the money in the world to trade and do this. You just got to figure it out now. When is the best time to trade? The time is now. If this is what you want to do. If it's not what you want to do, that's a different story. I can't make up the decision for you. But if you know you want to trade, and you know you want to do this, and you know you want to do this to make money, full-time or part-time or whatever, if you are motivated to trade the U.S. stock market, be an active trader and make money from the market and pull money actively out of the market on a regular basis, the best time to do it is right now, and figure it out with your schedule when you can make it work. And again, like I was saying, I'm mostly short. So times like this in the market are fabulous, 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 fabulous. Is the rest of the year going to be this way? Probably not. There will be times when the market rallies, and the market, to be honest with you, is still in an uptrend, even though we sold off today. Will we stay in an uptrend this year? I don't know. I'm not about predicting long-term trends. That's not my job. My job is to make money for the short term. That's doing the weekly options or the quick day trades. But again, at the end of the day, I prefer to short because of the fact that I am looking to capture big moves and fast moves. And stocks fall more rapidly than they ever rally. That's just a fact, okay? Panic comes in, people get scared, and they sell positions and dump them. And that's exactly what you saw actually happen today. And then it kind of spiraled out of control. And then it kept going. And then it kept going, it kept going. And that's what you saw today, like I was saying, in the power trend move and the big move that we had in the market. But again, even if the market's bullish, I mean, I've been trading since I started trading in 2008. Ever since I started trading, I've mostly focused on shorts. So I've been shorting in mostly bullish markets throughout the whole entire 17 years that I've been trading. So you can make money shorting in a bullish market or a bearish market. You have to get the right pick. Just so happened, like I said, in a day like today, though, where we could have done anything and everything, and they all would have worked, you know. Again, there were some things that were for sure better than others. Tesla was one of those picks. And again, we were ready in trades that I called last week through the weekend into this week, which was fabulous in options. People want to do options because they love the fact that they're cheap and you don't need a margin account, and people can day trade their retirement account doing options. But at the end of the day, the best, most fabulous thing about doing options is you can capture overnight moves in a gap. And again, I'm seeing some new people here. If you have questions, you got to plop it in the room down here where I have the chat. You go down, pick my name, to individual user, and then chat my name if you have questions as we go along. Everybody see that? Anyways, I have the stats in here from last year. I've been putting these in every webinar just to show an entire year of trading. I already know this year is going to be bigger than last just from where we're at so far with the stats for this year. But last year, for the entire year, win ratio was 69% in the room, and the newsletter ratio, I'm risking more money, which is why my profits are more for the newsletter, 70%. So on average, I'm around 70%. Again, I didn't add the trades yet from the last week or two into the 2025 results I'll show you, so I'm not sure exactly where I'm at. It's probably higher because literally every single thing we've been doing lately has been working. We haven't had any losing trades. We'll see when the end of the week comes by. But it's been, like I said, a very good time to do particularly what I do. Particularly what I do, the focus that I have on shorting, this has been a very advantageous time to trade. A lot of retail traders do not know what to short or where to short or when, or where to get in, where to get out, what to do. They don't have any idea. Anyways, 2024 results was over 4.7 million for the year doing day trades and options. And again, this is only through 3/4. 194,449 for the 2025 room stats. 73% win ratio. I know this is higher now. I just didn't add the last couple of days. Options, again, this is not updated either. Again, I'm risking more money in my options. You can do one contract. You do not have to do an advanced trader risk. 513,175. My average risk is around 8,000 a trade, and this is 68%, but this isn't updated like the last 2 weeks actually. But again, this is one of these things where if you are ready to do this, it doesn't matter if you do options, it doesn't matter if you do day trades. You have to take the money you have and the type of account that you have, even if it's a retirement account, and say, okay, this is what I got. I don't have a big account, but I can do this. And then you take it and you do it, and that's what you do, okay? So again, this is not even through today. 707,624. And I'm just going to give myself a round of applause because we have been off to a fabulous, fabulous start this year. It doesn't mean I'm never going to long this year. It doesn't mean I'm never going to go long again. We've had some longs this year. It means right now, the time, today, we have capitalized on this market, on the moves. And how did I know that a stock like Tesla, for example, today would crater and fall off a cliff? Because I got up this morning and I rated the gap. So I go through a process. I spend more time actually deciding what to trade than I ever do in a trade. That is the complete opposite of what most people do. So in other words, I'll get up at 6 o'clock in the morning, whatever, exercise, come back, and I will start going through my process to analyze the market, rate whatever stocks I want to rate that are gapping. This is again what you learn in the class. I figure it all out. I spend whatever time. I don't rush it. I take that time to decide what I want to trade. So I'm thinking so much about Tesla before I ever even enter the trade at all. And then the thinking is effortless because you already know that you want to do it. And then you take the trade when the market opens, and you're in, you're out if you're doing a day trade quick like we did today in Tesla, or you say, I know this is going to the piggy target or wherever it's going, wherever it is, and then you take the trade and you let it ride. The thinking is before you risk the money, not while the money's at risk. What I do is the complete opposite of what 99.9% of the traders do, and maybe even 100% of the people that are out there. People think when they're in trades, they overanalyze, they worry, they trade in fear, they think. They should spend the thinking before they take the darn trade, before they have any money on at risk. People don't think enough before they do. The doing is easy. The taking the risk is easy. After you have the confidence and the conviction and know where you're setting your course of where the trade's going to go. Does that make any sense? Is Henry here? I talked to Henry today. Henry, I see you. Henry, I talked to on the phone. Henry is new. Henry has not done the class yet, but Henry is trading options. And Henry and I talked today, like around 10 o'clock, 10:30, I don't know what time in the morning. And Henry was in a Tesla put. And I told Henry, I said, do something different, Henry. Hold it. And then it tanked. Henry, are you there? Henry, Allison's there. Allison did the day trade today. In the Tesla. Allison has increased her risk. Allison's already done the class. Henry, I don't know if you're there because I'm talking to you and I don't see your chat. Anyways, Henry was thinking a lot on the phone with me, and I'm going to use Henry as an example. Henry was talking and thinking and talking. Oh, there you are. There's Henry. I said, Henry, the thinking should have been done before 9:30. You must know what you're doing now. It's like too late after you're in it. So you think first, then you do. Then you let it ride. And then you see what happens, and hopefully it works. But again, when you're taking trades, you always have to think about your risk. I mean, no one has unlimited funds. Everybody has to take their risk and say, I'm going to risk this amount, and your risk should be the similar in every trade. But the thinking has to be done beforehand. After you're in it, if you're worried about it, and you're looking at it, and you're too focused on your P&L, and oh my God, what am I going to do? That is trading in fear because you don't understand what's going on, and you have to move past that. And again, I've been teaching people now for 14 years, so I understand the mindset of people. Very often I can spend 30 seconds talking to someone on the phone or 60 seconds talking to someone on the phone, and I can tell where they're at. You have to move past the fear, and there's only one way to do it, quite frankly. Just make up your mind, you're going to do it, and you're just going to go forward. And the feeling good about what you're doing will come over time as you're taking trades and you're making money with me and you're green. You're having a series of booking good days and green days. There's nothing you can do where you can get all the money back from all the trades you ever took in the world and all the classes you ever took that you didn't get anything out of. That's not going to happen like that, okay? You have to look at it like you're going forward and you're moving forward into a new adventure and something new. So what do? I do gaps. And again, the analysis is in the pre-market before I even trade. So that's where you need to be thinking, using your brain and doing the work. And there should be no stress based on that. Because again, if I get up in the morning and I see something and I don't see anything that I don't like, then maybe I don't do any trades that day. So then I didn't make any money, I didn't lose any money. It wasn't a good day to trade. There may be a day this week where we just do hands off. We said there's nothing today. There's nothing good. You don't know. I don't know till I get up in the morning, okay? But today was one of those days to go hog wild, as I say, because the setup was there, and I knew it. I knew it when I got out of bed, actually. I knew it last night, where I saw we were at last night, one of the futures. But anyways, I trade momentum. Today is a good example. Why? We had the momentum to the downside. There's momentum to the upside sometimes in some stocks, but there's also momentum to the downside. And again, stocks drop and fall way faster than they ever rally. So this is a trade that we did. This was Monday the 24th. This expired the 28th. So I did this a little bit after the open. It was 10:09. I sent out the options trade. This was an option. You would buy the 325 puts. Paul, are you here? Paul, are you there? Paul, I see you. You're going to buy this put, Paul. Paul is new. He just joined. Paul, if you did any trades today, you're singing and dancing. You buy the put, and you sell it to exit it, Paul. I tried to call you today twice. You didn't answer. Anyways, we did the 325 Tesla puts. This is a fabulous trade. It cost $475. 20 contracts was a risk of $9,500. Sold at $35, and I could have held this even longer. The profit was $60,500. Getting in on the 24th, out on the 26th. It was a return on investment of 637%. Let's take a look at the trade here in the chart. Oh shoot, do I have the chart? Here's the chart. Here's the chart here. Okay, so the 24th was here. Paul, are you there? I don't see your chat. Paul, you're buying the put to enter. You're selling it to exit. Paul, are you there? Stock close here, gap down. Open, dropped, boom. And again, I could have held this. So it expired on the 28th. I just want to show you here where we did it. Snug as a bug. It was right up in here. I saw it was going to drop. We did the 325s. It fell through 325. But if I had held this the very last day, which I didn't do it. I didn't do it. I was up a lot. It didn't make sense. We're going into NVIDIA day. This went down here to 275. Paul G, though, you didn't sign up for the class. Paul B signed up for the class, and Paul B is here. And Paul B got the trades today, and I don't know if he did them. I'm talking to Paul B. Okay, there's Paul B. Did you do any trades today? Paul B is so new, and today was probably, he probably was like, his brain probably exploded today. He said yes. Paul's doing the class this weekend. He signed up yesterday. Anyways, you would buy the put, and then you would get the drop, and you would sell it. So again, momentum is what? Momentum can go up, momentum can go down. But again, in the case of this, I just want to show you, this is really crazy here looking at this. This is an old chart. We're going to look at the current chart of Tesla in a little bit here. But again, this is momentum to the downside. You see how fast stocks can fall? Really, really quickly. Anyways, this was a good trade. If you wanted to do a smaller size here, 2 contracts, you could have made $6,050. And again, I'm calling it a beginner risk, but you could have done 1 contract. You could have spent $475 and made it over $3,000. So this isn't even the best exit, is my point. So it's not about finding the best exit. It's about actually doing it, okay, and getting the momentum. Jerry, I'm talking live. I don't know what you're talking about. I'm actually talking here live. This is not a recording. I'm speaking. Hello. I'm speaking live. Any other questions? Okay. So let's keep going. So how do you become successful? You become an expert in one specific thing. Again, I've mentioned my specific focus is on shorting, okay? It's on shorting. And I'm also doing gaps. But I'm looking for institutional money. Again, I had a discussion with Henry today. Henry's here. And Henry was like, well, this gap's going to fill. I don't know what to do. People that are going with individual traders, retail traders, have been having a very rough start to 2025. If you're not following on the side of institutional money, you're not going to see consistent gains in your trading. You may make money some of the time, but you're not going to make money more than you lose. The idea of trading and becoming successful is to take what you're doing and move it forward and to have more winners than losers. I know this sounds very simplistic, but again, many people just want to go with the group and say, I'm going to do this, I'm going to do that, I'm going to buy support, I'm going to play the gap fill. But again, if you're not following institutional money, then you're not going to see the lasting success that you want. Because every time you're up and making money, you're going to give it all back and more if you don't know what to do. Okay, so I became an expert in shorting just because I love to do the fast trades. And again, whether I hold something or whether I get out quick is up to me. But the whole key to trading and becoming successful is you got to get good. It's the only way to make it as a trader. You're just not going to make it if you don't focus on getting good. So everyone wants to make the money, and I get it. And some people are making money with me even though they don't know really what to do because they haven't done the class yet. They're trading the options on the newsletter. But if you don't know what to do, you're not going to trade as well unless you do know what to do. Because things get tricky. We've seen that this year. We've seen that the last week. We saw that in the last 2 days. Things can be tricky. And so in fact, things are more tricky than they're not tricky, if you know what I'm saying. That's where the focus comes in. And I think 2025 is just going to be one of those years where you absolutely are going to have to know what to do in order to become successful and really make money. Now, we talk about earnings season. We get a lot of gaps in earnings season. Earnings season, we're at the end of it now. There's a few things this week. But the big ones are in April, when the next earnings season starts, and we'll get tons and tons and tons of gaps. The reason we're having volatility right now is there's a lot of things going on in the world and the economy, and that's affecting the market. So how can you earn a living trading? Number one, you need a winning strategy. Learn first. Number two, you need a supportive mentor. Do and follow. The mentor is me. And then number three, become an expert in one thing. You implement the strategy, get good, and then you add size to win big. So again, how do you make money in the market? You have to use your brain. I was just talking about this. The prep work that you do ahead of time is so important. I spend more time thinking about what I want to trade than I do in the actual position. Think about that. Because if you're doing the opposite, you're doing the wrong thing. You have to determine who is in control, and that's what I get up in the morning and I do in the process when I'm getting ready to trade. I'm trying to determine who I think is going to buy the stock today, or who is going to sell the stock today, or the market, or who's going to short, okay? If you determine who is in control, and you get in that direction, the institutional money of the control, then you can make money. Again, if you get the direction right, you'll win. If you get it wrong, you're going to lose. It's really that simple. If you were long the market today, you lost. Period. End of story. And I didn't see how we closed because I was getting ready for the webinar. We may have bounced into the close, but I can guarantee you for sure, 100%, that if you went into today and you were long, you lost, okay? So a lot of times people then will go long and short the same thing the same day. They'll flip it. That is crazy. That's a zero conviction, and it's a very dangerous way to trade. Any questions here so far? How are we doing? All right. So what do you need? Number one, you have to have a strategy. I have a strategy. Mine is called golden gaps. It's just a term I coined, calling it a gold, because it's like finding gold in the market when we find a good gap. And we did that in Tesla, actually. So what is a gap? A stock gap in the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Okay, simple. So again, every day I'm looking for a new one. So every day almost we're doing something different. Here we did the target. Stock closed here, gap down, open, drop. Boom. We shorted it. Again, this was March 4th. We played the momentum. So you shorted it if you did this with me, and if you did, you made money. Okay? So what is a gap? A gap is a difference between the close and the open. We close every day at 4 o'clock, open every morning at 9:30. And this closed up here, snug as a bug, around 120, opened under 118, fell. Boom. If you had shorted that, you made money. Okay? So that's what I'm looking for every day. Every single solitary day. So again, what is a golden gap? A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You take the trade in the direction of the gap. You do the trade as a day trade or an option. I like to do both. But if you only want to do options, fine. It's whatever works for you. If you only want to do day trades, fine. Again, it's whatever works for you. You need a focus though. And again, mine is gaps and shorting and finding one pick a day. Again, I will do multiple options, particularly a day like today where I see the market's going to go in a certain direction. But again, I'm not in and out of options in 10 minutes, 5 minutes, 3 minutes. I'm letting my options ride. Okay, they could ride for the day, or they could ride for several days. Here's another beautiful, beautiful, beautiful one here. We did, this is Walmart. Stock closed here, gap down. Again, I'm going all the way back to February now. It's kind of crazy looking at this chart. Stock was up here. This is around 104. Boom. Gap down here around 98. I don't know where this closed today, but look at this sucker. This is crazy. Again, we're talking about momentum. And this was before the market sold off. We did this here. This is before the market even started tanking today. So again, you can find good gaps all the time. But you have to know what to look for, and that's what I teach in the class. And again, what do? I read the gap using a 26-point checklist. The checklist tells me what to look for. This is the time I spend doing the work and the thinking, not after I'm in the trade. After you're in the trade, the risk is already on. It's too late to think about it. You think about it beforehand. And again, I focus on shorting. Why? It gives me a niche, because a lot of people don't know how to short. A lot of people are not good at shorting. A lot of people are scared to short. Most retail traders, day traders, actually prefer to go long, okay? So again, you will really have an edge when you short. I've made a whole career out of doing this. And again, most of the time that I've been trading, the market's been bullish. But the rating system helps me determine who's in control, the bulls or the bears. That's it. You can only have one or the other. There's only two choices. You got the bulls in control or the bears in control. So again, gaps happen in the market on a regular basis. However, some gaps are better than others, and some gaps are nothing gaps. Some gaps are very powerful displays of institutional money, and the most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that's how you know when the power money will flow to pay you. Today is a great example. You didn't have to do a darn thing today but take the trades that I called and just walked away. And you didn't have to lean on your keyboard. Because the fact is, you didn't move these stocks today. Anybody that's here that did my trades, Tanya, I see you signed in. Tanya made money today. You're never going to move anything. The power money moves it. That's it. And you've got to be with it. And I hate to say it, but that's the smart money. Those are the big players in the market. Some people love Elon Musk. Some people hate Elon Musk. It's neither here nor there. He's a billionaire, okay? If you're not with the big money, you're not going to make it. You're going to get killed, actually, in any market, but particularly this market. So you got to learn how to read the footprints of institutional money. And again, a lot of people don't know how to do this. And it's really just knowing what to look for. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. And it's really that easy. But you have to understand how to trade with this side of power, and you need to know how to find it. Tanya said a genius system. Thank you, Tanya. Tanya did the class in February. She's on a roll already. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on the side of power. Last week, I called 260 Tesla puts. That was an insane call. And it was an insane trade, and you could still be in it. I mean, again, these are like crazy trades is what I call them, where if you have one contract, you can make thousands of dollars. So don't give me all this stuff that you need all this money. I talk to people all the time, well, I'm not ready to do the class because I have to have this much money and I need to. No. Just start making money now. I mean, you can make money with 100 share lots. You can make money with one contract. It's very often that people have in their mindset that they need all this money to trade. You can take a small amount and build it. You can take a $2,000 account and build it to $3,500. You can take $3,500 and build it to $5,000. You can take $5,000 and build it to $10,000. And again, many people have retirement accounts. You can trade your retirement account. You got to call your broker or find out if you can do it, but you can buy puts, which is basically shorting. You should be able to do that in your retirement account. You should call and find out where your money is and you can trade it yourself. You know, a lot of these money managers have no clue what they're doing. In fact, they're telling people to go long. They're like, oh, this is, I guarantee you, people are getting calls today. People are freaking out about their accounts today. And people are on the phone saying, oh, don't worry, this is a great place. This is a fabulous place to go long. Like, this is perfect or whatever. Like, I guarantee you that's what money managers are telling people now. Or just, you know, go long here. This is a great price for Tesla. Do. Again, what am I looking for? Institutional money. Tesla's a great example. Tanya's saying in less than a month you built your account from 7,000 to 18,000. That's, Tanya's getting a round of applause. Tanya, send me your picture. I'll feature you in an email. Trader of the month. There. Boom. Okay, getting back to what I was saying. You have to tell me how you found me again, Tanya, because I forget. Anyways, getting back to what I was saying here. Institutional money. So again, stock closed here, gap down. This is a fact red bar, okay? So no amount of traders could make a fat red like this, okay? So whatever this went today, $30, $28, whatever it was from tip to tail, again, I didn't see exactly where this closed. Like, there's no way you'd have this kind of fat without institutional money. Like, no amount of retail traders could make a move like that in a stock like this, okay? And we were in it early. We were actually in it before today, in puts. I know people love to do options because they're like, oh, I can just pay, $4 for something instead of spending $260 a share traded on margin. But the real power of options is not that. It's that I can call a trade on, March 6th, and it can go do, and you can get up in the morning and boom. And then all the money's just there. You walk away, you make yourself a sandwich, you come back at lunch, and you're up just tons of money. That's the power of really doing options, where you don't have to sit and lean on your keyboard. Because I do the quick fast trades in the room because I want to get in and out fast, because things can wiggle and jiggle during the day. But again, options, you can let them ride. You can let them ride, and you can let them ride overnight, and that's the benefit. Otherwise, if you're in swing trades, you have unlimited risk. Now, Walmart, again, is another one. We didn't do a day trade in this today. We could have done a day trade in this today, too. We did the Tesla. Stock close here, gap down, open, rallied, dropped, boom. Came all the way down, broke 87. Again, how did that even happen? How did this even happen here? How did any of this happen in the last month? Institutional money. Again, why? You could say, oh, it's happening because X got hacked, or it's happening because of the tariffs, or it's happening because the Fed is not going to lower rates on Wednesday, or it's happening because of there's 2 wars going on. It's happening because the government shut down. You could name 20,000 things why you think the market's falling. Just like when we rally, you could name 20,000 things when we rally. Nobody knows. It doesn't matter. Who cares? You don't even have time to analyze that. I mean, I wouldn't be able to sleep if I had to read every earnings report and watch every single news thing. And I try to keep up with what's going on, but the fact is that you can see that this fell. You can see that this fell. I mean, who cares why? Do you know what I'm saying? You need to get the trade. You need to do it. Okay, so anyways, I get that people want to trade. And again, Henry's here. Henry's trading with me. People want to trade. They want to do it, but really understanding why helps. And again, Tanya just did the class. She's doing very well. Human beings, we're curious. Our nature is that we're curious and we want to know. We want to know why. Why is this happening? Why is inflation so high? Why aren't they going to lower rates when inflation's so high? Why aren't they going to do something about this and that and the other thing? Everybody wants to know why. So if you're honest with yourself and can just look in the mirror and say, oh my God, I know I'd do better if I did know why. I just don't know why. And it's the tricky times that it counts. When it's easy and everything's going up and everything's going straight down and there's no wiggles and jiggles, then again, whatever the case may be, it's easy. But the fact is that that's not most of the time. That's not every day. And that's why understanding why really counts. And again, I get up in the morning and I rate the gap using the 26-point checklist. If the gap rates 20 points or more, I take it in the direction of the gap. Tesla has rated good today. And it fell. So again, the checklist tells me you can do this, Melissa. This has a high odds of working. And that's even before you do the trade at all. You think, and do the analyzing. And then when the market opens, you do the trade. And then you're not worried and you're not stressed. You have to stay within your risk parameters, obviously. But then you're not worried about the wiggles and the jiggles. Do you understand what I'm saying? So think about it. Again, this is you, this is me, this is everybody in the market. This is everybody in the world that's trading. And all the things that are happening right now, which by the way are going to continue to happen like this, they're going to go on and on and on. Look for a wild ride in 2025. And you know what? It could continue for the next 4 years. So, I mean, again, all the people who were just going long when the market was rallying and making new highs every single solitary day in 2023 and 2024, and everyone was buying every support and buying every dip, that's over. Done. Boom. Kaputzi. Done. And anyone that's been doing that has seen that that's done. So the reality is you got to be fresh. You have to be on point. You have to think intellectually. You have to say, okay, wait a minute, I'm smarter than these loser people that keep doing the same thing and losing. and I'm going to do something different. I'm going to think ahead. I'm going to evolve. I'm going to move forward. That has to be where you're at. Otherwise, you're just going to piss away money doing stupid trades and losing, and it doesn't make any sense. Or you can stop. You say, I'm not going to take the year off. I'm not going to trade at all. Well, that's silly, because there's tons of opportunity to trade. And again, you can make money shorting when things drop and fall. And you can always make money faster to the downside. It will always be the case. It's very rare that something actually has what I call a panic move to the upside of this panic buying. The funny thing is, the ironic thing is, Tesla, we went long, and this was the fall of 2024, and we made tons of money going long Tesla. We were in it early. We had a beautiful ride-out. We got the whole thing. Again, now we're making money shorting it. Like today was huge. But the fact is that is rare that you have panic buying. There was panic buying in Tesla last year in 2024. Again, those of you that trade with me, you saw that when you did the trades. There was panic buying in Tesla, but that's so rare. There's normally not that. You don't really have rallies like that. Like, you're not going to have anything like that in the market. It's just not going to happen, you know? So at this point now, you're like, okay, volatility is your friend, but you have to know the direction, okay? And again, you're going to have volatility the upside or the downside. So again, why gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap, like we saw today. When I trade, I'm looking for and trading momentum. Again, momentum. That whether you have a small size or a large size, you will get a good risk to reward. So I tell people to take it easy, go slow. Because if you're too much risk on it, then you're gonna look at your P&L. So Fed this week, Wednesday. Do I know what they're going to do? No. Do I know what they're going to say? Sort of, because they made a statement Friday, which is probably what they're going to reiterate on Wednesday. But how will the market react? Nobody knows. I don't have to worry about it. I'll see it in the gap. I'll see it in the gap Thursday morning after the meeting, after the minutes. And then I will make a decision at that time if I want to do any new trades. And again, we've seen gap ups that have sold off. We've seen gap downs that have rallied. We've seen gap downs that have sold off, and we've seen gap ups that have rallied too. If you don't know what you're doing, how to read what's going on here, you're going to get caught in the wrong direction. Everybody says, oh, it's rigged. Everything's rigged. No, it's not rigged. It's that, again, the smart money is on the right side of things all the time, or most of the time, unless something happens like a war or something like that. What you call the dumb money, or people that don't know what they're doing, trading, are very often on the wrong side, and that's why they lose. When they're up a little bit, they get out quick. And then when they're down, they tend to take big losses or double down. You ever hear people doing that? People would double down. Any questions here? Anyways, a big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. So when you're looking for institutional money, you're really looking for the power. The power in a stock. You want to be on the side of power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. Okay, and again, I need to reiterate, the market is still in an uptrend, but I have no problem shorting in an uptrend. We do it all the time. Because again, I'm trading momentum. I'm not trend trading. I'm trading momentum. You know what I'm saying? So anyways, number one, you need a good strategy. Number two, you need a supportive mentor. Do and follow. You follow. Take the trades that I call in the room. Take the trades in the options newsletter. You set your risk, but it's about being consistent. Now, here was one we did here. This was last week, no, 2 weeks ago, the 28th. Here. Again, you look at this, you say, well, how the heck did you make money in this? It closed green. Well, we shorted it. We shorted it out of the gate. We shorted the tail. Got in, got out. Boom, done. Boop. Right there. Again, one of these ones where you're like, well, wait a minute, how did you scratch your head? It was a nice call. We shorted it 277.10, got out 274-ish, okay? And again, it fell. So again, when I'm looking for something, I'm looking to do something where I'm looking for sell-off. I want a quick sell-off, a fast sell-off. Here's the aim bag. We did this one here. I got a little bit more than $1 out of this. This was 227. Stop close here, gap down, open, dropped. Again, this was a short, and it fell. I didn't look at what this did today. So again, you want to chunk it out. Chunk it out. Take the trade, get the move, get out if you're in the room. If you're an option, you can chunk it out in an option. But, you know, I like to let my options ride. I'm trying to get in and out of them and get at least 50%. So like if something moves, I'm not going to kill it like for 30-40%. Again, I'm trying to get 100% if I can get it in every single one of my options trades. And again, if I'm in a trade and it goes against me and I'm down, then I let it ride. I'm actually in one trade now that's down, UNH, which expires Friday. I don't know if it's going to work or not. If it doesn't, then I'm going to lose in one trade this week. But, I mean, we made money and everything else. But again, I let it ride. So I don't do anything with it. I don't kill it. I just say, okay, I took the trade and I put the risk on. And that is really the easiest way to actually manage trades. It's about less is more, and again, you do the pre-work, and then you do the thinking ahead of time. That allows you to do the focus before you even put the risk on and risk the money. We're looking for quality, not quantity. Unless I see something like, for example, today, then I will look for quality and quantity. And today we did a lot of trades. We came into the weekend, into the morning with trades, and we did a good amount of trades today because I saw what the market was going to do. And we had trades on early enough before the sell-off that we got the move. Now, the market did continue down and fell, because as the train is going down the tracks, again, talking about shorting, talking about selling and panic, it obviously picks up steam. And that's exactly actually what you saw today. Any questions here as I'm going along? How are we doing? Hello, is anyone there? Okay, I'm going to keep talking. Allison's good. Anyways, like I said, people enter my trading room with a certain mindset. They expect to win. I have some people in the room that are here. People expect to win. In fact, I think people are shocked when we lose. Now, if I take a trade in the morning and I lose, I will take a retake. It's called a retake. We'll do a second trade. But most of the time, I try to take one trade a day and done, like I did in Tesla. I could have traded all day, day traded. I could have kept the room open all day today from 9:30 to 4. That's not what I do. That's not what I do. But I saw where we were going. I think holding options is a lot easier. But again, people enter my room and they expect to win. That is a very different type of thinking than a lot of trading rooms out there. We're not open all day. We don't trade all day. We do the one trade. We're in. We're out. We're done. And again, the room is day trades on margin, where I'm doing trades on margin. So you have to have a margin account to do the day trades. You have to be able to short 1,000 shares or whatever you want to do. If you don't, then you could do the trade as an option, okay? And you can get out where I get out of the room. Some people are doing that. But the bottom line is that I do options where I'm holding them longer. But you could do that. I have people in the room that are doing that. Paulette, I don't see her here. She does that. And I think Kathy does that too. I don't see her here. That I have no idea. I would have to ask support, JT. The answer might be no. I don't know, but I'm not support. I'm not tech support. I have a support question. I have a tech question. JT, if you want to email me, I will find out from support. I have an assistant. He handles the room. He handles all the logins. He helps people get set up. That's not my forte. So the answer may be yes, and the answer may be no. You can email me and I'll ask support. Any other questions? Okay. I see some of you that are new, but I see some of you that have been following me for a long time. You know, I feel bad that you missed out on days like today, but it's sort of like, you know, I don't know what people are waiting for. They just are waiting for the perfect time. It's the perfect time is now, you know, when you decide you want to do it. There's never going to be like a time when everything aligns where you're like, oh, I have all this money and I have, you know, this many vacation days and this and that. It's just, life is busy. I mean, most people have families or kids or married. They have responsibilities, jobs. It's just like, you know, I mean, I'm busy and I don't even have a husband or kids, and I'm swamped. If I want to do something, I just make the time to do it. You know, I want to go see my family, I say, that's it, I'm going, I take the weekend off, I take a day off and I go. I mean, that's kind of what you have to do with life. Life's too busy now for everyone. It's going so fast. Today went so fast for me. Like, I can't even believe that it's almost 5 o'clock. Like, today went, woo! Like, that's how fast the day went. As fast as the market fell today is as fast as my day went. All right, let's keep going here. Chunk it out. Chunk it, chunk it, chunk it. Chunk it in the room. Henry, are you here? I told Henry to chunk it. Henry's doing options. I said, don't hold everything. Don't get out of everything. Chunk it. Take a trade, get a move, chunk it out. Hold this one. Again, if you're on the letter, you can tell the things I like, or you can tell the strikes I'm calling when I like something, or I think it's going to go to a different number. It's about working smarter, not harder. Again, there are certain days where you have to pay attention to your trades and the market and what's doing, okay? And that is right now, but that's not every single day where you have to sit all day or watch trades. But there are certain times when everything's moving. Is there a TV or radio on in the background? No. The air conditioner's on. I have the air conditioner on because it was hot in New York today, and I had huge, massive windows, and the sun was coming in. Does someone hear TV in the background? I don't know. Maybe it's your house, Matt. There's an air conditioner on. That's it. Anyways, getting back to what I was saying, panic, fast trades, okay? Fast, quick. If you are waiting for something to go, if you're waiting, do you know how many things, again, if you're long something, for example, you know how many things could set up or happen? Again, I prefer to short. I'm not saying I never go long. I have gone long. We've done some longs. But, again, I could take a long trade, and I could be waiting an hour for it to go. So I'm talking about just like a day trade, for example. I'm always going to choose the short side over the long side because panic moves happen faster. And I feel like I said, a lot of people don't know how to short. So I think it gives you an edge. And then number 3, how do you become successful? Focus on one thing. It's about being consistent. You get up in the morning and you focus on one thing. One stock pick a day. Maybe 2. But again, how can you have a lot of losses if you're only doing one thing a day? You can't. It's impossible. So again, you need the proper focus. For me, I focus on stocks that are controlled or moved with institutional money. Sometimes we do the ETFs, like we shorted the market today. And again, how do I determine that? I get up and I rate the gap. So how do you know what stock to trade each day? I get up in the morning, I'm looking for the power money. And most days we do find something to do. But you find gaps and rate them using a checklist. This is what you learn in the class. You learn the entries, you learn the exits, you learn the targets, but you also learn the checklist. This is the meat and potatoes of what I do. How did I know that the market would fall, that we were in puts in the market before it tanked today? Because I rated the gap. The checklist tells you what to look for in the price of the stock, okay? And again, Tesla, I could talk all night about this, I could talk all day. We've actually been talking about this in the room. So for the people that are here that have been in the room, we've been talking about it. We've been talking about it quite a lot. So I don't think anyone is that surprised that we saw the move in this today. And again, you could say, well, it was Elon Musk and X and this and that. It would have been something else. Don't you understand? Something would have happened eventually because it was setting up to go. It's always about following the power of money. It's always about following some type of structure. For some reason, and I don't know if it's just about money and people are worrying when they're risking money or whatever the case may be, if you don't have a structure in place, you're going to tend to turn the television on, go to a website, log into a chat room, go to a webinar, and you'll very easily then be sucked into doing trades that you shouldn't be doing. Do you know what I'm saying? If you shouldn't be taking trades from anybody if you don't know the person, the reason they're doing them, or the strategy behind it. No one can join my room without having done the class. So there's nobody that's doing my trades in the room when we're in and out of Tesla in 5 minutes, 6 minutes, 10 minutes. It doesn't understand what I'm doing. They know what I'm doing because they did the class. Seeing when and where the power money positions are getting in is like finding a gold mine. And that's how I came out with the idea of the golden gap theory. Seeing gaps clearly in how they're creating trends, changing trends, and making momentum is a very powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves. What's always something? I don't know what you're saying there, Matt. But again, as far as, the power money goes, that is the way that you get the big moves. Again, we're not trading penny stocks. We're not trading low float stocks. We're not trading little rinky dinkers. But again, lots of people say, okay, well, I don't want to pay, this much money to do short Tesla or the market. The market's expensive to do as a day trade. I get it. But the options are very reasonable, in my opinion, for what some of these stocks cost, So again, the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that's profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. Trade the gap in the direction of the gap. When do you trade them? Early in the morning in the open when they set up and trigger. And you must have a structure in place in order to make any money at all consistently. And I really think this year is going to be a year where a lot of people probably continue to do what they've done in the past. It doesn't work. They will continue to do it even into the latter part of the year. Because a lot of times, very often, it's very difficult for people to move off of what they're doing. If somebody made money doing something for 6 months, they will do it for the next 6 years, trying to get back to that point. Do you understand what I'm saying? Even though it doesn't work, and it hasn't worked, and even though they're losing, that's how the human mind works. That's how human nature is. You know you have something good when you can consistently make money in any market. Again, right now is prime example to trade with me because of where the market is at, where we went, and the sell-off that we had today and that we've seen for the last 2 weeks. But I showed you the stats for 2024. The market made 1 million new highs in 2024, and we shorted plenty of stocks and plenty of things, and we made money. You have to do something that consistently works over the long haul in any type of market structure. But there are times like now, again, the last 2 weeks, the last 3 weeks, and like today, where you really want to be a part of my group. But it's about the consistency that many traders lack in their system, and I don't know. Like I said, people just tend to get sucked into things that aren't good trades. Because people are desperate to do anything to make money. And you got to move past that desperation and that fear. So again, how do I know ahead of time? Again, I'm rating the gap. I use the checklist. And this is the pre-work. So I don't have to, worry after I'm in a trade. Again, what am I looking for? A high probability of directional bias for the entire day, big move on the day, preferably like today, early confirmation of the bias in the move between 9:30 and 10. We had that this morning with Tesla and the market, and precise entries with follow-through, and a good risk-reward target potential, which in an option I think 50% is good. We've been doing trades lately that have gone huge. That's not every trade, but you definitely want to capitalize on the ones that are going big. And again, I think in a day trade, 1-to-1 is good. Some days we get more. Again, if I had held Tesla day trade all day, would have been a sick trade. Actually, it would have been insane. But I am very regimented with what I do in the room. And some of you are in the room, you know that. You're there with me, and I'm very regimented with what I do with the fast trades. So create a money management plan for yourself. You want to do it? How are you going to get there? Where are you going to go next? Again, you got to be able to figure it out. But you're closer than you think to reaching your goals. It's just that some people are stuck. They're stuck because they're living in the past or things that happened that didn't work out their way. But I think if anybody is interested in trading and they're interested in doing it, they understand that it can work. And again, at the end of the day, lots and lots and lots of things don't work. But that doesn't mean that nothing works, okay? So you want to be practical and professional. Again, I have a 26-point rating system. This is what I teach in the class. You want to have a good year this year. Any questions? Matt, that has nothing to do with trading whatsoever. I don't know what you're writing. Any questions about gaps or trading? Empower yourself today to trade if you want to do it. And it is very empowering. Is Tanya still here? Allison's here. It is very, very empowering once you start to do it. Once you start to see it, once you start to make the money, and as fast as you can make it, then you really see and understand that it can be done. So the class I teach is called the Golden Gap Course. This is a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is this weekend. So this is the March class if you want to get in and start trading. It's March 15th and 16th. The class is $69.99. It's a class on how to find, pick, and play professional bearish gaps. Everyone pays the same. Classes are online, but I'm doing a special for the bundle. 3 classes, 3 subscriptions. The Golden Gap Course bundle is $89.99. It includes the Golden Gap Course, the Trends, the Gap Options course, and it includes all the subscriptions for free with the Spring Special, which ends on Friday, and 2 one-hour mentoring sessions with me, one-on-one. Tanya said it's very empowering. I was in and out of the day trade today very fast, JT, and Tesla. As far as my options, I was pretty much glued to my screen all day today, looking at things. I entered some new things, watching the things I was in, because I saw what was happening. So today was a day to trade. Today was a day to do it. But my day trades, I didn't do any other day trades after the room today. We shorted Tesla quick and fast, and we're out. And I'll do the same thing tomorrow and whatever I decide to do, whatever it is. I'm very, very regimented and very, very scheduled. I do not have an in-person class scheduled at all for 2025, and I don't know if I'm ever doing another in-person class. That was a once-in-time special thing that I did in 2024, which I said at the time. Alex is here. Alex came. Alex met me. Alex was in New York. I have no plans to do that in the future. Any other questions from anyone? Again, do something different. Think about what I'm saying. You can do this. You can do it from home. Start thinking seriously about what you're doing with your money. Start thinking about what you're doing with your trades. Again, don't miss trading this year. Any questions? Again, I'll put the special back. Let me know. Any quick questions? Allison, you're doing good. I have no idea where we are tonight. I have no idea where we gap tomorrow. It was a wonderful, wonderful, wonderful day. And again, I like to give myself that 24 hours to take a mental break. I need to de-stress. And tonight, it's a beautiful day in New York. I said I have the air conditioning on. It's like 65 degrees here today in New York. So again, the benefit of trading is you can stop and have the rest of the day to yourself. Not every day is we're focused all day like this. The only reason you'd be trading and watching stuff all day is if you did options. Not everybody that's trading with me is doing options, to be honest with you. Some people just do the day trades to get out. And that's it. They're in the room. They need me to call the trade and the entry and the exit, which I do in the room for the day trade. Some people, they're just, they don't want to do the options. But, personally, I love both. Any other questions here? From anyone. I'm amazing. Matt, I have no idea who you are. If I'm so amazing, I don't know why you haven't done the class. What else? Henry, do you have any questions? Henry, are you doing good? George, I see George. George B. George is trading options. George, you should have had a good day. Kafui, I see you. Do you have any questions? Will came back. Will had a good first day back. Did I say 50% profit from options is a good target? It is a good target. Again, times like now, we're capitalizing on it, Tanya. But in normal times, 50% is good. And I said to you, because you go to your job during the day, some days you're at the hospital, if you can't watch something, you don't want to miss your exit. Do you know what I'm saying? So if you have an appointment or you have to go to work or you have to see a client and you get up in the morning and I'm just making this up, if you paid $1 for something, you're like, let me just put a sell order, it's a limit order, it'll cancel, it's a day order, put a sell order at $1.50. And then if the trade goes 50%, you're out that day. You could put it at 2. You could put it at 2. In this market, you can put it at 100%. But I'm saying you don't want to be like have a move and then everything's up, and then because you couldn't get to your screen, then you miss exits. That would be bad. Do you know what I'm saying? On the days that you have to work and have to go to the hospital, you can get up in the morning and you can put orders out. They will cancel out if they don't hit in the day, and you can put them in the pre-market. It's called a limit order. And if you don't know how to do that, you have to call your broker and get trained. All right, wonderful. I'm going to let everybody go because I'm going to the chiropractor. I'm zipping out. I will see some of you in the room tomorrow morning. Have a fabulous night. If you're interested in the class or have questions, email me at melissa@thestockswoosh.com. Be careful, everyone, and have a wonderful evening.